This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil. So today we're going to talk about MACD in multiple time frames. I'm actually going to use 3 different time frames. I want to show you a few things related to confluence in this indicator. But we also want to know that you have to be confirming price. Okay, this is not, you don't use MACD by itself. You use it to confirm price action. So if there's a downtrend in price and you're trying to do a reversal pattern to the upside, you're going against the trend. Okay, we want to make sure we're using the indicators to confirm what we're seeing in the price action. All right, now before we get into that, I did want to mention that I am having a Black Friday sale, and it's now all the way through December 1st. Why don't you email me if you want the link to get a deal on the bundle. Okay. Also, if you do enjoy this content, please hit that like button and also subscribe. Okay, so I've got the ETF for quantum computing, QTUM, and this is going to offer a pretty good example of what we're looking for. So let's start with the monthly time frame. Okay, so we've got the 18 MA here, and we start to see this turn to the upside. Okay, and we actually had a signal back here on this pullback, this pinch play, but I want to focus in on the second pinch play. You can see how this made another strong move, and then we got a pinch here. So back-to-back pinches following the breakout. That's what we're looking for. This was the one prior to the breakout inside the range, right? And then we get 2 following the breakout. All right, so when you see this pullback here, right here, you can see that is this decline here on this time frame, and that is this decline here on this time frame. All right, so we've got a pinch play on the highest time frame, the upper time frame. All right, I'm going to take this off so you can really see. So we've got a pinch play on the highest time frame, and that coincides with a pullback to a rising 18, which is above a rising 40. Remember, we always want to use the MACD to confirm price, not the other way around. We don't want to look for a signal here and then try and confirm it. We're looking for a signal. We're looking for price action, and then we're looking to confirm that with MACD. So this isn't a strong position because it's above its signal line and it's pinching in towards the signal line as well. And both these lines are rising, or at least are above the 0 line. Okay, now. This is actually interesting because it's forming a 0 line reversal, okay, while this is forming a pinch. So we get a pinch on one time frame and a 0 line reversal on the other. And when we do this, we actually are setting up the small time frame. So I just want to make sure, let me move this over. So on the smallest time frame, here we get a sharp move to the downside, and we are way below 0. Okay, but then what happens is we get this big green bar, and we form a pullback below the 18. All right, and that is happening while the MACD is holding the signal line. All right, so in my course, I refer to this as a counter-parallel lines signal. Okay, so we're using the MACD is going in one direction and price is going in the other, related to the 18. All right, in other words, we make a move to the upside and then we pull back below the 18, but they're basically parallel going down while these are parallel going up. Okay, so we want to use that to our advantage, and we have a pullback. And whenever we have a pullback, we can go to the smaller time frame to get a signal. All right. In other words, any time you have a pullback, which is this signal here, right? In other words, we're pulling back off of some type of a move where we showed momentum to the upside. All right, momentum was strong going up to the upside. If we have that, then we can play a pullback. All right, this almost goes without question in any time frame. So if you have strong move to the upside and you have good momentum confirmation, then we can play the pullback. When we get that pullback, we go to the smaller time frame, okay, to look for entry. All right, that's how we go about doing this. So anytime you get a pullback, so if you get a pullback here, then we go to the smaller time frame here. In this case, we want to go to another time frame because we're getting a zero line reversal, and now we want to use this signal here to get us in, as opposed to waiting for any kind of like a crossover here or anything like that. All right, it's too late. So we always want to go down to a smaller time frame if we can. All right, now I want to show you another example. I'm going to use the Dow Jones ETF, the DIA. All right, now in this case, we get a move off of the low here, and we make a move up, and then we form a pinch here. All right, so this is the high time frame. We make a pinch on this time frame. All right, now I'm going to erase this so we can see where that is happening on this time frame. Okay, so what's happening, what's interesting is during this pullback is we form a reverse divergence. Okay, in other words, MACD is making a lower low while price is making a higher low. Okay, but we have something that's going on here. We're getting a pullback on this time frame. You see that? We're getting a pullback right to the 40, and we have our reverse divergence in place. We have low ADX in place, okay? And we have MACD turning around on this time frame. All right, so what are we going to do? We're going to take that pullback, and we're going to go and look for entry on this time frame, okay? So we always, so again, this is really important. I get this question a lot. What's the entry on a reverse divergence? Well, if we got an orderly pullback on that time frame, okay, then we go down one time frame and we look for a signal. All right. The alternative entry would be looking for an RSI buy signal. So we're getting a pullback here. We're looking for a higher low to form right at the 40 with RSI confirming. Okay, that's the other way you could do it. I'm not going to pull up the RSI. We want an RSI buy signal. There's plenty of videos I've done on RSI buy signals. All right, so you want to be on the lookout for that if it's taking place. So that's one way to do it if you don't want to go down to like an intraday time frame or something like that. All right, but in this case, we have this pullback, and look at the way this played out. We get a move to the downside, and then we go into the zone between the 18 and the 40. This is the 18, and this is the 40. And we go inside that zone, okay? I get this, again, these are questions I get a lot, which is, what does it mean to go in the zone? Well, it's going in the zone between the 18 and the 40. We've got this area between the 18 and the 40. If we go inside that, and then we come back out, we want to see what's happening. What is going to take place here? Do we go to, let me erase this. Do we actually go to a new low, a significant new low, an important new low, or do we just come down and test this area, which we did multiple times? All right. If you notice the way this played out, we had a declining 18 and a declining 40. So we want to be very careful about buying any kind of an uptick. So if you think about the trigger 2, you go in the zone and then you come out and then you get a green bar coming back up. The problem is that if the 18 and the 40 are declining, okay, you want to be a little bit more careful about jumping in. So I actually think this bar here, where the 18 is actually turning up, it might be the next bar after it where you have real confirmation that the 18 is turning up. It's an inside bar, and then you take out the high of the big green bar, okay? And you get a lot of confirmation that the green bar is turning up. Now, again, there's a zone where you want to be a buyer on the small time frame, on the trigger time frame, and that is we don't want to be getting in before. So if the 18 and the 40 are declining, okay, it's too early. It's too early. All right. If you get a big green bar, a lot of times that's going to cause the 18 to turn and cup around. And that's really your entry. We want to make sure we do that, but we also want to get in before we have an uptrend. This is too late and this is too early. Okay, so coming in at this point where they're declining or coming in at this point where they're rising is too late. In my book, this is just how I do it, all right? I'm just making sure you understand. So if we get somewhere between where you're in an uptrend on the small time and where you're in a downtrend on the small time frame, then you've got the right area of where you're looking to be a buyer, okay? All right, I wanted to make sure I covered that again. I did that in a previous video, but I wanted to cover it one more time. All right, big green bars or pullbacks to rising 18s before they cross the 40 are you typically really, really good entry points. All right, and they'll coincide a lot with the 4 triggers that I have in my course. All right, if you're interested in the course, again, just reach out to me. You can email me at joe@rabilstockresearch.com. All right. Have a great week.